Good Sunday afternoon, everybody. Eric here with you. We are going to do a little update here for the week ahead on the major indices. So we'll be taking a look at the S&P 500, the Nasdaq, the Dow Jones, and we'll probably hit the Treasury yields and the VIX real quick. I just wanted to start here with the S&P, of course. So you're looking at a daily chart here. We're looking at about 3 months worth of time here. So if you notice, we had been expecting a bounce back into the 618 area, which was right through here. After we bought the decline, so I told you all to buy against this 200-day moving average. That trade has worked out perfectly well. We have rallied back into the 618, but now we're kind of at a point where we expect the typical outcome here to be that we will see a decline off of this 618 retracement. Now it is possible that we go on above it to where the 786 would be, and that's about in this area, 2800. Or we could even return to the highs or beyond, but I just do not think that that's a very likely scenario at all at this point. So, like I say, I think you're kind of looking right now to start selling into this zone, and we can go ahead and add that 786 just so we have it. But I do not think that that's necessarily going to happen. So, we might end up seeing a push up into that area. 2800 is pretty much a round number, but at the same time, I just do not think it's going to happen. So I would be looking to sell in this area that we're in here. We kind of thought of this as a zone. So the zone was pretty much in this area right here. It was based on that 382, 618, the 50% retracement, as well as the 50-day moving average, which we have now gotten on top of. This yellow line here at 2725 is where we're at right now on that 50 days. So I wanted to mention that it was a kind of bearish close last week for that day. So if you notice here, and this is kind of a recap on how an OHLC chart, which is what we're looking at, works. This tick on the left hand side of this candle here is the opening price. The low is denoted by the bottom of the stick, and the high for the day is denoted at the top of the stick, and our closing price was the tick mark on the right hand side. So as you notice, we were able to open, and intraday we rallied up, and then we kind of came back down, so that we ended up closing only fractionally higher than where we opened the day. So that typically indicates that a reversal is going down, so to speak. So we'll take a look at the hourly chart to see if we can kind of confirm what it is. And I just went ahead and added that 618 retracement on this chart as well, just so you can kind of see it from this perspective here. We had kind of talked about this high over here being significant in terms of needing to be cleared for a bullish momentum to be kind of established there and stuff. So now we have actually taken that out, and we have set a fractional new high, and right now that high is acting as support, or at least it did going into the end of the day. You can kind of see how we declined down to it, and then we just kind of bounced around sideways here throughout the rest of the day there. So there is a possibility that if this level were to hold, and that's a little bit rough on the drawing there, but if this level were to hold here, then that could be setting the stage for a move up to a higher level, say that 2800 area that we were talking about. But I think that whenever we get the markets opening up this next week, tomorrow being closed for Washington's birthday, so Tuesday, I think that whenever we get the market open there, we'll probably see a little tick sideways before we ultimately end up falling back down for the rest of the next week. If we kind of dive on in a little bit closer here, just for the 10-day, 15-minute, you notice here, and I'll just zoom us in just a little bit closer, you kind of can see, and I'm just going to go down to a 5-day and stay on the 15-minute chart. You can see already that we had the moving average crossover right up here, so that was a sell signal. The low that we need to really be worried about, and there's a few little swing lows. You can see one right here. So we have not taken that out yet. So right now it's not been confirmed, but this is the more important low, I think, that needs to be taken out to validate that trend. So yes, I think that the sellers have now kind of taken over, so to speak, and stuff, but we might find a few buyers at the beginning next week. But like I say, ultimately I think that the week ends up being a down week starting next week. So I think that this, while not confirmed, I think that the trend is going to be lower from here. So there's a no trigger, no trade kind of thing, but at the same time, you want to be ahead of it to some degree. So I think you can short against this 618 retracement that we're at right now on this daily chart. 2743 is the number, so I think you can go against that, looking for a play back down to the 200-day moving average or lower. So like I say, that's this kind of playing. We're going to be looking for 2550, 2546 in that area. So that's kind of where we'll be looking to play to the downside. Okay, the other index that I wanted to mention here was the NASDAQ. And I just kind of, well, actually, let's take a look at the Russell real quick first. So the Russell, same scenario, and this is kind of the reason I wanted to show all these indices at the same time. Same thing, so we have our 50-day moving average here with the yellow line, and we also have this 618 retracement right here at 1547. Those kind of coincide together, actually almost to the T. So notice that the Russell 2000 was not able to close above either one of those levels. So that's kind of a bearish signal. So we had an open here, our low was set, our high did get above those levels, and then we ended up pulling back to close beneath it. So that's why I think that's kind of a bearish signal. So that's why I feel like that the market will probably be setting its stage for a continuation lower. So the Russell 2000, same scenario, running into the same kind of resistance as the S&P, and in fact pretty much all the indices are in that same scenario here. So if you take a look at the Dow Jones Industrial Average, same setup. You know, we had the decline here, and we would be looking to go back into that 618 before we set the stage to go lower. So that's so far what we have done, and we have actually the Dow here, we actually were able to close above the 50-day after opening pretty much right on it, but at the same time we did not close above this 618 retracement. So the fact that we were not able to hold above that and we pulled back down below it, again, I think that sets the stage for a trip lower. Now notice that on the Dow Jones here, though, we have yet to test this 200-day moving average that's down here in this orange line. So you know, I think this is one of those that where it will eventually, I believe, test that, and that's around 22.9, somewhere in that area, 23,000. So I think that we end up seeing a test of that 200-day moving average, and this low to be taken out right here. So that's just kind of my prediction, and we'll see if I'm right on that as time goes forward. And then of course the NASDAQ. Now we shorted the NASDAQ last week, and we shorted the NASDAQ going into the end of last week as they play towards this week. If you notice here on the NASDAQ, kind of the same scenario, but it's in a little bit better shape. So there's a couple things I noticed about this chart. One is that we had the same pretty much bounce, but we never quite made it to the 200-day moving average down here. So notice the gap in between here. And now we have bounced back up into that 618, and that's what actually was my cue to short this thing, was this trip into the 618 here. Now it has bounced a little bit higher, but this was a pretty bearish looking close here on Friday of last week. So notice there that we were able to close slightly higher than we opened, but we closed lower versus the previous day, so that gave us a red candle again. So I think that sets the stage. Now with the NASDAQ here, so you notice here that we had a crossover to the buy side, and this is the swing high that we could be watching. So that did get taken out, and we do have a moving average cross here. So we're actually getting a buy signal here on the NASDAQ in this regard, but at the same time the other indices do not confirm that. So that's why I'm a little bit hesitant to believe that this is an actual trick or a trend to the upside that's being established here. So again, with this one, I went ahead and put that 786 on there just so you could kind of see it. But you know, we have not quite touched that yet, but at the same time I think that we may not have to touch that to go lower. Now if we are indeed in a bullish pattern here, or we're about to start moving back to the upside, I would be looking for this 50-day moving average here to hold this yellow line. So that would be a dip back down to this area here before we go up higher. But like I say, I think we're just setting the stage for, you know, we might do one of these going into it, but at the same time I just don't understand how this would ultimately play out to the bullish side with all these other indices being in the situations that they're in. Take a look at the VIX here real quick. The VIX is one that we don't really trade in directly, or we don't invest in directly. We're just we use it to kind of hedge out our portfolios by using calls and puts and some of the ETFs that are designed to track it. But the VIX itself is not directly investable. So is that a word, investable? Anyways, so as you can see here, we actually closed the week underneath that 20 level, so that was a good sign. But we have kind of started to find here some support, so to speak, at this level right here, that 18 level, that we kind of you can see here we stopped at it before we had our major move to the upside here on this day. So like I say, this 18 handle is being a significant area to kind of watch, I think. So until we can get back beneath this area, there is a potential for volatility to spike back higher, and I don't know if it goes that high. or if we kind of go into the 30s or the 40s here. But at the same time, I'm not trying to guess where we go to. I'm just trying to guess which way we go to, which direction the trend is going to be headed. So, oops. Did not mean to show you D there. We don't really have any interest in Dominion resources at the moment. The other one that I want to talk about here, and this is one that you're seeing a little bit of talk about, or at least I am. If you take a look at Treasury yields, now this is the yield, not the price of the bond itself. So this yield, and the way that this is done on this chart, this is actually a 2.877% yield on the 10-year Treasury. And if you take a look at it a little bit longer term, we're kind of coming off some extremely depressed levels here. The one that I wanted to show you, though, was right over here, and so I'm going to pull it up here for you. So this is a way to kind of track the yield curve, as it's known as. So I'm just looking at the 10-year versus the 30-year right here. And basically the way to read this is to exit out pop-ups there. So this is on a weekly perspective, but I'm going to update us to a daily here to kind of take a look at this. Okay, so the way to kind of read this is, so this is a ratio, so we're saying, call it 0.92. So the 10-year yield is 91.7% of the 30-year yield. So in other words, you could track this backwards and you could see, what the yield is as let's just go ahead and do it here. So the 30-year is giving you a 9% premium to the 10-year. So that's pretty pitiful, honestly. So why would you lock your money up for 30 years for a 9% premium over 10 years? That's kind of the way to look at that. So this yield curve doing as it is, and even some of the shorter durations, and we can take a look at those. Whoops, real quick too. Even some of those shorter durations are doing the same thing. So the 5-year to the 10-year is a 91.3%. So again, why would you lock up your money for 10 years whenever 5 years will give you 91% of that yield? So I'm kind of just watching this because I think this is going to be indicative of what the market's doing. If this yield curve were to keep on rolling over as it is, and meaning that these yields keep kind of going up to a line. If we all of a sudden have a 10-year and a 30-year that yields the same, that's a very bearish signal, obviously. So that's something that we'll kind of keep an eye on longer term. But I did want to pull up here and show you that I do have some levels here, and I had a trend on there, and I'm not sure if that's on the other ticker. Yeah, so here we go. This is a monthly chart here. This is going back to 1994 or so, 1993. This peak up here at 8.18, basically 8.175, has trended down, and you can see here that we have tested this long-term trend before, right here, and that was up at about 5% or so. We came close to testing it here. On this thing, and now we're getting to the point now where we're testing it again. So if we can actually break out above this, and let me just kind of clear that other stuff off. If we break out above this and say we meet one of these upside targets here, and I put them on here for you, say 1272, that's giving us about 3.5% yield, and the 168 is giving us about a 4.8% yield. So I think that we could actually run into either one of those, and the likely scenario would be that we test this falling channel or falling trend here, and then make a move higher. So I think that the bond yields are getting this stage set for a major move to the upside. So if you need to refinance your house or borrow money, then now is the time to do it. Okay, I think that that's pretty much going to be all that we cover on these indices. Like I say, I think the bigger picture here is that you just got to start thinking. I mean, this is a long-term here, monthly chart, and I'll just kind of wrap it up by showing you this. This is going back to 1971. So we had talked about these as major levels to be watching here. These targets up here are derived from this is the .com crash right here that you're seeing. Let me just draw it so you can see it. This is the .com crash. This is the financial crisis crash. So what I've done is I've projected from this high to this low, and from this high to this low, to get these targets up here that we have set up here in the yellow and the orange and the red lines here. So we've already touched that first area, which was in that 2681 to 2733 area, and now the next ones are up here at 2987 and 3047. So those are possible, like I say, but I just do not think that we get there quite yet. Is that I'm going to do a little bit more work for this, and I had to kind of do an edit there because I did a little bit of screen drawing that didn't make sense, so I just wanted to fix it up for you. But there's a there's a thing called Elliott wave theory, and basically the principle of it goes pretty much that stocks will follow a pattern that looks similar to this, and I'll show you here in just a second. So we pretty much have 1, 2, 3, 4, 5. So we have 5 phases in the uptrend, and this can go the other way, of course, too. And then you have your A, B, and C. So it pretty much says that there's 5 points to an uptrend and then 3 to the corrective phase. So if you kind of take a look here, and I'll just show you the reason that I think that this might be going into place. So you have 1, 2, 3, 4, and now 5. So if that's setting the stage for an A, B, C, possibly. So like I said, I'm going to do a little bit more work on this. There are certain things that it has to follow in order for that to be accurate. 3 has to be bigger than 1, and 4 can't be more than or less than 2. I mean, there's a lot of little ifs, ands, or buts. But in any event, like I say, this picture right here should show you how extended this market is, and how much it's been pretty much a straight up picture for quite some time. I mean, even this little area right over here, this little pullback, this was back, I think, during the European ordeal back in 2015. So even that was a fairly modest, minor pullback, especially relative to, say, this one or this one, which was way more than a pullback. But like I said, I think that just in any event, even if this is not correct here with this Elliott wave, us being at a 5 right now, me looking for the ABC to come following behind it, I think that you can just at least see that we are into some major extensions here. And this has been, and if we look a little bit closer term, you can kind of see how major it's been and how volatile anyways it's been. So if we just look at it here at 2 years worth, and this is still a weekly chart, this is zoomed in pretty close. This may be considered a bull trap right here. So a bull trap is whenever we break out, and so the bulls think that we're about to go blasting off to a new level, and they end up being wrong, and then the next week is a down week. So people might have saw, hey, we broke out and we've now taken out these targets, so now the rally is on, and then the next week they were informed rather harshly that was not the case and stuff. So we actually opened a little bit lower and dove during the week, and then ended up closing pretty much right at that extension level. So that's kind of a reason to be watching this. And like I say, I think that this is just setting the stage for us to go fall. And this is that low that was about the 200-day moving average right here. So that could very well be taken out. And if you kind of look at a little bit bigger picture, or a kind of pulling out here, this is 5 years now, still monthly chart. We could set a trend here in place, and we can see it off of this low right here. So basically, we're sitting right on top of this trend line as we speak. So we need this area to hold pretty much right here, right now, kind of thing. So if we can stay above this trend line, then maybe we kind of can push back to new highs. But like I say, I'm just kind of in the camp here that this is not going to be a retest the high. This is just a corrective bounce before we continue lower. So all right, guys, I will expect to try to get some ideas out to you. I've noticed a few setups that I'm kind of stalking and wanting to put on. I put on a few trades there at the end of last week, and we talked about those. So we'll kind of follow up some of those a little bit later on. Like I say, the markets are closed tomorrow, so it gives you time to do your homework and enjoy a day off. And then Tuesday we will be back to making money. So I hope you guys are sticking around, and we will see you on Tuesday. Okay? All right. Bye bye.